Hey everyone, I've only got a couple minutes, so I may have to go rather abruptly because I got some stuff I need to attend to, but I wanted to share a couple thoughts on the current price of Bitcoin. So Bitcoin right now is at about $63,063 a coin. Been there for about the last 2 months. Anyway, and I posted some stuff on Facebook earlier today about the fact that between $15,500 and $74,000 between 2022 and 2024 took 478 days, and all of the gains happened in the 24 best days of that. So obviously that means 95% of the time it's going Bitcoin's going sideways or down, or in aggregate neutral, and the 24 best trading days of that 478-day period resulted in the price of Bitcoin more than quadrupling. That is not unique to Bitcoin. Every asset works that way. If you look at any high growth stock, including the Magnificent Seven, which is Facebook, Google, Microsoft, Amazon, Nvidia, Tesla, and maybe one more I could have missed. Anyway, if you look at them, they're all the same, where the vast majority of the gains happens in a very small percentage of the total days. That's typically correlated with just either big momentum shifts or big news events or things like that. So I've also posted some images showing the Bitcoin return by year. So you may notice in those years, it goes up 2011, 12, and 13, 3 years in a row. Then it goes down in 14. Then it goes up 15, 16, 17. Then it goes down 2018. Then it goes up 2019, 20, and 21. Then it goes down in 2022. Then Bitcoin goes up 23 and 24. And so the first question you probably have is, hey, if it's 3 years up, 1 year down, isn't the smart thing to do to buy it and then hold it for 3 years, sell it, and not have Bitcoin, sit in cash for a year, and then buy it after the down year? Well, you would think that, except betting on patterns like that with any asset is quite dangerous. I'll give you an example. One of the first books I read about the stock market was The Little Book That Beats the Market. It's a little like a blue book, or I don't know what it is. But anyway, The Little Book That Beats the Market. The concepts in the book about the stock market and how it works and what the Dow Jones Industrial Average is and all that, those aspects of the book are pretty good. But the book does something called backtesting. So backtesting is when you take a hypothesis of what might result in a really good stock performance, and then you test it with the entire historical average of the entire stock market, and then you figure out which strategy would be the optimal strategy based on the entire history of the patterns of the S&P 500 or the Dow Jones Industrial Average or the NASDAQ or individual specific stocks. Well, this guy had done that, and he had written a book, and he had a website, and the whole works. And he had backtested the entire stock market, literally the entire stock market. And he had determined that the best strategy to follow, if you did exclusively pattern recognition, basically if you just looked for historical patterns and then tried to replicate those patterns, the very best strategy was to take the Dow Jones Industrial Average, which is the 30 largest industrial stocks, or it's not exactly the 30 largest, but essentially the 30, sort of most prominent industrial stocks, those 30 stocks, and buy not the cheapest one, because he said, the cheapest one might be a dog, but buy the second cheapest one, and that is what you should hold. You should have all of your money in the second cheapest of the 30 Dow stocks, with the logic being that, the Dow stocks had never gone bankrupt, nothing horrible had ever happened. And surely if something bad did happen, it would happen to the lowest priced of the 30 Dow stocks, not the 29, higher than that. And this guy had backtested it and determined that that was the best strategy based on the entire history of the stock market. And not only was that the best strategy, but he advocated double 2x leverage, meaning buying stock with leverage, which means with margin, with debt, so that you can double the upside return. Now, if you double the upside return, that also means it doubles the downside, which means if it drops 50%, you lose all of your money. If it goes up 50%, you go up 100%. Now, I do not advocate anyone ever uses leverage or buys anything with debt, including Bitcoin and all that. But anyway, this guy had figured out that not only the strategy of buying the second cheapest Dow stock was the best one, but that double X leveraging that was the best strategy. And again, this was based on backtesting, where the second cheapest Dow stock had never dropped by 50%. Therefore, you were never going to lose all your money. And that by doubling the upside, you could get sort of insane returns. Well, so he wrote an entire book about the stock market, and then part of that book was this strategy and advocating the strategy. Of course, I don't believe in investing that way. I don't believe in, debt financing, margin, and leverage. So the book was really good, but I never took the strategy seriously. But he had a website that tracked this, and it tracked how much his portfolio was outperforming the general stock market. Well, again, that strategy worked great, as all strategies do based on past patterns. It worked great until it didn't, because after the 2008 recession, one effect of the 2008 recession was that the automotive industry got hit especially hard. And one of the Dow stocks, one of those 30 Dow stocks, was General Motors, GM. And General Motors happened to be the second cheapest of the 30 Dow stocks. So based on this guy's strategy of going all in with double leverage on the second cheapest Dow stock in either 2008, 9, 10, whatever it was right around or after the 2008 recession, his strategy resulted in going all in double leverage on General Motors, which went to zero. So now if it had gone down 50%, you still would have lost your money. It didn't go down 50%. The company literally went bankrupt and the stock went to literally zero. And so, again, a strategy that had been comprehensively back-tested and was, in his mind, certain to work, so certain that people should be double X leveraging it, took everybody's money to zero. And again, he had even written an actual book that had gotten actually published based on this actual strategy. So anyway, that is why I do not ever advocate people try to time the market or look at historical patterns. Now, I do think certainly the historical patterns means if we got to the second half of 2025 and Bitcoin seems to be behaving exactly like it did in 2021 or 2017 or 2013, I was not there in 2013, I was in 2017. But if we're in the second half of 2025 and somebody's like, I've been watching Bitcoin for the last 2.5 years, it's amazing, I'm considering going all in right now, I would probably say, well, you might want a dollar cost average. Like, I certainly don't believe in, investing based on historical patterns, but I'm not sure that I would put all my money in Bitcoin in the second half of 2025 because history tells you that's really bad timing. So I'd probably recommend dollar cost averaging, where they put $100 a week or $1,000 a week or whatever amount, but the same amount in every week. That way, if you do happen to catch the very top, well, you keep investing through the trough. If history repeats, it would mean that the Bitcoin is going to have a peak of this 4-year cycle in the second half of 2025. And then 2026 will be a tough year. And then 27, 28, and 29 will again be sort of epic years. And on and on and on. That just seems to be the way Bitcoin goes. But we don't know. I mean, there's no way of predicting that. And I certainly don't recommend investing based on that. Part of that is because we are in the stage of Bitcoin adoption where there's still very, very, very few major corporations that have Bitcoin on the balance sheet. MicroStrategy, which is Michael Saylor, the founder and CEO there, they have 1%. They have bought up 1% of all the Bitcoin that will ever exist. They have it on their balance sheet. Square/Block, the company led by Jack Dorsey, the founder of Twitter, the company he started while he was at Twitter that he runs now exclusively after he sold Twitter to Elon Musk. That company, Square, which changed its name to Block, holds Bitcoin on the balance sheet. So does Coinbase, and so do a few others, but very few companies have adopted Bitcoin as their primary treasury reserve asset, meaning what they sit on when they're sitting on, sort of quote cash or whatever sort of asset they want to sit on while they're waiting to make decisions. So the next wave will be corporate adoption, institutional adoption, and ultimately nation state adoption. El Salvador is the only country that has a significant amount of Bitcoin on their balance sheet that they intend to keep. So as a result of that, the reason again, I think now is a great time to buy Bitcoin and the reason I would say, don't try to time the market is if somebody came to me and said, well, I'm not going to buy any Bitcoin in the second half of 2025. I'm going to wait for a major crash. I'm like, yeah, the problem is the news story could hit any day that suddenly Switzerland is putting 20% $20 billion, let's call it, 1.5%, 2% of all the Bitcoin in the world, or whatever that, number is right now, it'd be very easy for them to suddenly announce that they're buying, 15 to $30 billion of Bitcoin, which is 1 to 2% of all the Bitcoin that will ever exist. And suddenly the price goes, when it was supposed to crash sometime starting in the second half of 2025, the price suddenly goes zooming through 26, 27, 28 as countries all over the world adopt Bitcoin. So the problem is patterns work great until they don't. And when they don't, you get totally screwed, which is why I don't advocate, again, that people ever invest based on patterns like that. Although, again, it's worth, if the pattern looks like you're at the very peak of a market, I would say you should probably dollar cost average instead of go all in, as opposed to today's prices of 63,000, where I'm like, if somebody came to me and said, I want to buy Bitcoin, and I said, well, how much do you want to buy? And they said, well, I don't know, 10% of my net worth, when should I do it? I would say, well, there's no better time than the present. Now, 6 months ago was better. 6 months before that was even better. 18 months before today was the best. But you don't know that. And if somebody came to me and said, I want to put 10%, 20%, 30% of my net worth in Bitcoin, and I've got a long time horizon I'm willing to hold for years and years and years, should I put a little in at a time or should I wait? I would say at $63,000 a coin, I just go all in. I mean, I would just put it in, and I would have no qualms about doing that at 63,000 a coin. If we're sitting at 180,000 a coin in the second half of 2025, and somebody asked me the same question, I would probably say, you probably ought to put your money in over the next 12 months. Put 1/50th of it in every week for the next 12 months. That way, if we hit a huge bull market that breaks the trend while you're investing the whole time and you're getting your money in, and if we go through a big bear market, well, you're getting your money in for cheaper. So, but again, there's just no way of knowing that, which is why at today's prices, I would feel completely comfortable telling someone today's a great price. I would say whatever you plan to put in the long term, if you have it now, I would feel completely confident putting it in at 63,000. So anyway, so those are some thoughts. Bitcoin has had this, I'll recap here. Bitcoin has had this pattern of 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. So that's the first sort of takeaway. Second is that as soon as you rely on that pattern to buy Bitcoin, it's probably the pattern's going to break, just like the people that relied on this guy's, little book that beats the market. When all of them went all in on General Motors and then it went to zero, well, they shouldn't have relied on that pattern and that what's called back testing. So third principle is now still a great time to buy Bitcoin? Yes. Fourth, why is the price not higher than it is today? I don't know. General malaise. A lot of people bought Bitcoin on the way up the last 18 months. Some of them are selling because they're not sure what they own. They haven't done the work. They haven't done the research. Also, some of them are just, you get this, something goes up and then it stops going up for a little while. And it's been about 2 months that Bitcoin hasn't been going up. Meanwhile, NVIDIA, the AI chip making company, is going through the moon every day. And so, of course, there's some people that, they bought Bitcoin because of the momentum and the excitement. And now they're dumping their Bitcoin and buying NVIDIA, which I think is a super stupid thing to do. But who knows? I don't know. I have not studied AI and I have not studied NVIDIA, so I can't tell you if it's a massive bubble or if it's just going to go up for a long time. But NVIDIA's, I think, the most valuable company in the world right now. That does strike me as odd, given the fact that all they do is make AI chips. And lots of other companies can make AI chips, including Intel and AMD. So unless NVIDIA has some sort of proprietary technology that I'm not aware of, which they might, I have not even bothered to Google it. But anyway, but I would certainly not be selling Bitcoin for any other asset right now. Certainly as I have life needs, fixing stuff around the house, all that sort of stuff, I liquidate Bitcoin when I have to buy stuff. But it's always because I value my family or, making, the experiences of travel with my family or whatever. It's because I value something that I can't get any other way. Like time with my kids when they're young. I'm never selling Bitcoin to buy another asset. Like, I just don't think there's any other asset in the world that's better right now. So why would I sell a scarce, better asset to buy another asset that's not as good? I'm just not doing that. So anyway, all that to say, those are, some thoughts, some principles about patterns, about Bitcoin, about the long-term price of Bitcoin. I think now's a great time to buy. I don't know how many more days are going to go by before some news story sort of reignites the Bitcoin bull market. I don't know what that news story will be, what will do it. A lot of the miners, because the Bitcoin, if you want my answer why I think the price is down, A couple of reasons. One, I think general malaise is you just get people who sell stuff when it's not exciting anymore, and then it'll get exciting again, and they'll come back and drive it even higher. But that doesn't affect any of the fundamental hardcore people who are buying Bitcoin because they know what it is, like me, and they know how valuable it will be long term. So you're getting some of that. The miners who had the block reward cut in half in April of 2019. A lot of those are having to sell Bitcoin that they had accumulated, and they're selling it to try to survive because their block reward every 10 minutes is literally cut in half after April 19th, which obviously has made life a lot harder for the Bitcoin miners. It just means the more efficient ones stay alive, and the poorer ones have to sell a lot of the Bitcoin they accumulated to try to stay afloat until the price goes back up. So that's pushing the price down some as well. But anyway, in the long term, it's normal. Again, look at any high growth stock, Amazon, Apple, Netflix, any of them, and they chop sideways for months at a time before something ignites the next big upswing. So totally normal. Bitcoin's no different, et cetera. So anyway, so those are a few thoughts. If you have any questions, I'd love to answer them. I'm literally always trying to post to Facebook whatever I think would find people more valuable, most valuable. The only reason I do it is to help you. So if there's something I can cover that you would find helpful, let me know. Oh, I'll throw in, somebody sent me today, the hypothesis that maybe the NSA created Bitcoin. First of all, that's like a rumor that's been going around for a decade now. It's totally not true, and it makes zero sense. Like, why would the government create something that takes control out of the hands of government? Like, it makes absolutely no sense for the NSA or any other government agency to create something that is the opposite of what people in power and control want, which is more power and control. So the opposite of Bitcoin is a central bank digital currency, a CBDC. If somebody wanted to try to get everybody on a CBDC, the easiest way to do that would be not give them Bitcoin as an alternative, because nobody wants a CBDC, a central bank digital currency, if Bitcoin's an alternative. So why would the NSA or the CIA or any other government agency create the perfect alternative? So the equivalent would be hypothesizing that the Postal Service secretly created email. It's like, wait, what? Like, email is bankrupting the Postal Service. Like, why would the Postal Service secretly create email so that people had an alternative to the Postal Service? So why would the government secretly create a decentralized money as an alternative to centrally controlled government money? Like, it makes no sense. It'd be like, again, like homeschooling was secretly invented by public schools. It's like, wait, what? Why would public schools secretly invent homeschooling to compete with them? Like, it just makes absolutely no sense. So now and then people float these ideas about the NSA, being somehow involved in Bitcoin, and it's like completely ridiculous because it literally makes absolutely zero sense. Plus, if you go read everything that Satoshi Nakamoto has ever written, which I've done, it's about, 9-10 hours to read everything Satoshi Nakamoto ever wrote. He never said anything, but everything he ever wrote takes about 10 hours to read it all cover to cover. I think a book called The Book of Satoshi has it, and then you have to read some of the new documents that came out in the COPA trial in the UK. I won't go into that, but the trial that proves that Craig Wright is not Satoshi Nakamoto. Nobody thought he was other than him, but that trial proved it. But some new documents related to Satoshi Nakamoto came out during that trial that just further prove, obviously, that Satoshi was real and that he's not Craig Wright. So anyway, but you go read all that, and Satoshi, was a person just like me. I'm not Satoshi, but he was a libertarian-minded person who believed in freedom, was tired of the government debasing the currency, believed the world needed a decentralized alternative for a monetary system of the world, and he was just tired of the system we have. So everything you read is in the vein of Murray Rothbard, Henry Hazlitt, Friedrich Hayek, Ludwig von Mises, all the great sort of Austrian school of economics. I mean, clearly Satoshi Nakamoto was of the Austrian school of economics, which I've talked about before as the only economics philosophy and school of economics that I think is legitimate is the Austrian school, not the monetarist, not the Chicago school, not the modern monetary theory, which is completely ridiculous. Keynesian economics is like the worst. Well, Keynesian economics and modern monetary theory, MMT, both of them are like just the stupidest thing humans have ever come up with, right up there with, socialism and communism as good ideas. Anyway, so I'm certainly part of the Austrian School of Economics, and I think Satoshi Nakamoto was as well. So I know how those people think. I know how they, how they work and all that sort of stuff. And it was just very clear from all of those readings that Satoshi was a real guy or woman, a man or woman. He said he was a male. We don't know, but a man or woman, and they were passionate about what they were doing, and they were doing it for all the reasons they said they were doing it, and it's working out exactly the way they predicted, which is pretty incredibly amazing. So anyway, I know I talk a lot about price of Bitcoin. Obviously, the reason I'm excited about Bitcoin is because of its fundamentals. It's because it's just this most amazing, incredible technology that probably humans have ever invented, right up there with figuring out how to make fire, the number zero, the printing press, the internet. I mean, Bitcoin is just this incredible technology. And because I understand that incredible technology, I understand what gives it value. And because I use it every day with my Coinbase debit card and transferring, money around as needed, I see how powerful Bitcoin is. And it's just this amazing, amazing, amazing technology, which is why I'm so excited about it. And which is why, the price cycles make sense, because those are the same price cycles if you follow the adoption of the internet or, any other technology throughout human history, the railroad, just anything that, resulted in it took a long time to become a big deal, mainstream, and, following the adoption cycles of all of that, Bitcoin is right on track. So anyway, hope it's helpful. As always, here to serve if there's anything you need on your Bitcoin journey. Thanks.